right. Hello, everyone. Let's go ahead and get started. I am Attorney Joshua Sells, Senior Tax Attorney at JM Sells Law. We are a national tax firm headquartered in Ohio, and we represent folks all around the country before the IRS and also the state revenue agencies. So if you or your business owe the IRS or state money, we help you get resolution. We do offer programs, penalty abatement, installment agreements, audit, appeals, tax court, you name it. If you're in a situation where you owe the IRS money, we probably have handled similar cases before. But today we are actually going to be talking today about tax liens. Okay, 7 ways to remove a tax lien. Now, this is a guide that we put together for small business owners, 1099 income receivers, and self-employed. So if you have a tax lien filed against you, this is a very practical but also very substantive webinar on some ways to have that removed. So we've been in the practice for many years, so we have seen a lot. And through all of that, we have came up with a lot of different tips and tricks. I know on the screen it says secrets from a tax attorney. They're not necessarily secrets, but a lot of folks don't know some of the inside information that we have. So I hope this is a help to you. And again, if there's ever anything that we can do, feel free to call. We're not going to charge to just talk to you on the phone and figure out what's going on. So again, 7 ways to remove a tax lien. Let's go ahead and get right into it. So the first thing I want to talk about is, and this is a big one, the IRS has a lot of administrative rules that it has to follow. These are found within the Internal Revenue Manual. And the Internal Revenue Manual is the playbook by which the IRS operates by. It's not random how a revenue officer handles himself or herself. It's a set of very well-defined practices and procedures that are identified in the Internal Revenue Manual. Let me just say, if you are working with another professional and they are not looking at the Internal Revenue Manual, I would probably walk away or at least ask why not. Because this is going to tell you exactly what to expect. This is their playbook. And why wouldn't you want to look at that? So anyways, we're going to talk about what happens when they don't follow their own rules. Now, the first thing, it's not really a rule that's in the playbook and the revenue manual. This is actually law. This is in the Internal Revenue Code. This is known as the 5-day rule. So once a tax lien is filed, that Form 668Y, the IRS has to, by law, send you a notice within 5 business days. Now, if they do not do that, that lien is not valid, and I would immediately request a withdrawal. So that's something to look out for. If you did not get that, it has to be certified mail too. Then that is definitely grounds to have the lien immediately withdrawn. Now, let me just say, ignoring certified mail that's not going to count. All the IRS has to do is send it to your last known address by certified mail, and as long as that mailing was timely, that counts. Telling them you never received it, I mean, that's not going to fly. So it had to legit not be sent, and the IRS would have kept a copy of that send notice in your IRS file, your transcript, which, by the way, is something that we pull for every single client. You absolutely have to pull that transcript. So if they did not send that notice, that's grounds for a withdrawal. That notice comes with a lot of appeal rights, and you want to take advantage of that. So that notice is actually very important. So if you did not get that, absolutely, we can get your lien withdrawn. Pretty easy, straightforward. Now, I will say, what will happen is they'll withdraw the lien, and that gives you time. Really, all this is, it's a mechanism to buy time, so you can go ahead and deal with the underlying tax. because the next lien cycle, they're just going to go ahead and refile again, and this time they're not going to forget to send the required notice. So don't think you're off the hook, but it does give you time to go ahead and deal with it. Some other reasons, in bankruptcy and you had an automatic stay, you were in the military in a combat zone, or you were in a disaster area, a government declared disaster area, the lien cannot be filed during those circumstances. So if it was, absolutely we'll get it withdrawn. And then one of the big ones, I call this the jump the gun reason. So you had the tax assessed to you, you owe the IRS, and they don't give you any time to deal with it. They just slap a lien on you. That's premature, and absolutely, we're going to get that withdrawn if that happens. And again, this is a federal tax lien. What I'm showing you on the screen right here. This area up here is where the county recorder is going to put the date. That's the file date. That's the important date. Okay, the date filed. That's what determines the countdown for the 5-day rule. So you'll want to definitely look up there. A lot of other information on here that's going to be important. The area where the lien was filed in, originated, could be the, especially if you're 1099 self-employed, it will be the self-employed small business unit. You'll want to also see down here in the bottom where it says title. If it says ACS, that's the automatic collection system. That's good. That means you don't have a revenue officer assigned to you yet. So that lien tells you a lot of information. So yeah, here's the form. This is what we would use to withdraw the form. Again, if it was premature, that's something that we would definitely be all over and get that lien withdrawn. Now I circled this box here because you do have to provide an explanation. I just want to give you some free legal advice here. Be careful what you tell the IRS. It can and will be used against you. Okay, they are trained government agents. They know how to get information from you. So never tell them too much. Don't tell them not enough. You just tell them exactly what it is that they need to know. And that's where a lot of the value of having a tax attorney representing you comes into play, because you can never unsay or unwrite something. So you got to be very careful what information you give the IRS. So the second way to get a lien removed is an installment agreement. So a lot of times, if our clients, maybe they have a decent paycheck, they got money in the bank, the IRS is probably not going to take a settlement then. They're going to want them to do some kind of payment plan. Now, if you owe less than $25,000, if you or your business owe less than $25,000, you're on a direct debit installment agreement, where they automatically debit the amount, and you're able to pay the tax liability within 5 years. Okay, that's that C side we were talking about. Then the tax lien qualifies for automatic withdrawal. So that's a good place to be in. However, the IRS never or rarely automatically withdraws the lien. You've got to request it. So when I work with my clients and they meet those criteria, I'm automatically sending in 12277 to get that lien withdrawn, even if it's not necessary, because that happens quite a bit where the IRS doesn't automatically remove or withdraw that lien. So if you have those parameters, you owe less than $25,000, your direct debit, and you're going to pay that tax liability within 5 years or the expiration date, the statute of limitations, absolutely, that lien needs to be withdrawn. There's no point in keeping that active, so we can get that removed right away. And this is a really big one. I want to kind of park it here for just a little bit. Sorry about that, just getting a little sip of coffee. So if the lien is causing a financial hardship, let's say you have your business, maybe you're in the securities industry or something, and that lien is showing up, and it's customers are a little worried that you have a tax lien, so they're not coming to you. That's going to cause a reduction in your income. Maybe it's going to show up on a job application or a security clearance. That could be a hindrance to income. Now, if that's the case, if that tax lien is a hindrance to income, absolutely, we can make a request to have that withdrawn. And typically, if it's causing you to have less or no income, you or your business, absolutely, we can get that withdrawn. That's a That's a huge reason. We use that all the time. And I want you to think about it logically. The IRS filed the lien. Why did they file the lien? They wanted to protect whatever assets you may have because they want to say, hey, world, we are first in line if they sell those assets because they owe tax. So the IRS filed the lien to get paid. If the lien is going to cause you to have less income, that means the IRS is going to get less taxes paid back to it. So it makes sense. They're definitely willing under those circumstances to hear your arguments for withdrawal. Now, I want to warn you, the withdrawal will happen, but it won't automatically be public. So if you're worried because it's going to show up on a job application or security clearance, you have to specifically request in writing that it is made public. That way it tells the world that a lien has been withdrawn. Okay? Under law 6323J2, you have to give written notice to have the lien withdrawal made public. Okay, this is critical. You cannot forget this step. It has to be written notice. If you're working with a professional and they did not do this, okay, again, run the other way. But if you are going to stay there with them, ask why. Why in the world did you not put it into writing? Okay, so as a tax lawyer, we know the tax law, the tax code. This public notice request has to be in writing at the time of the withdrawal request. So important, okay, because that defeats the whole purpose. If you had the lien withdrawn, you got to actually have public notice that it has been withdrawn. That way it doesn't show up on your security clearance or your job application or what have you. So the next one we're going to talk about is offer and compromise. So this is a program you probably have heard about. It applies to individual tax as well as to business taxes. So the offer and compromise is the typical pennies on the dollar program that many folks have heard of. The truth is less than 3% of all tax resolution cases actually land in an offer and compromise. And an offer and compromise is basically where you say, hey, government, I owe you $25,000. You're never going to collect it because I don't have that. So will you take $2,000? And if they accept your offer, okay, wonderful, great, you're a rare event. It doesn't happen that often. If they accept your offer, it does not automatically withdraw the lien. You have to actually satisfy the conditions of the offer for the lien to be withdrawn. So if you offer $2,000 to pay your $25,000 tax debt and they accept it, until that $2,000 is fully paid, the lien will stay. Of course, even after you fully satisfy it, again, I would slap that lien withdrawal form out there just to make sure. Again, I make it part of my process. That way, that lien is publicly withdrawn. Again, I err on the side of too much as far as forms. Again, I don't give them too much information, but if I think that maybe the revenue officer is playing hardball, I'm going to make sure that is in writing that we want it publicly withdrawn. Okay, so again, whether it's individual or business, because the offer and compromise is available to business income as well, then absolutely the lien will be withdrawn when the terms of the compromise are satisfied. The next thing we're going to talk about is subordination. So subordination is the lien is out there, and this would be the paper lien, and you want to refinance your house or a business asset. The IRS would take a back seat to the mortgage lender as long as they're going to get something out of it. Now that could be immediately or it could be down the road. If you can make the argument that, hey, later on, this is going to make me more likely to be able to pay my tax debt, that's a good argument, and the IRS will likely subordinate its interest to allow you to refinance that house or business or whatever it is, because it's going to put you into a better financial situation. So subordination is a very important tool, very powerful. The second thing is discharge. Maybe you're a business that has an asset you're going to sell. Well, the IRS says, hey, are you going to give us some of that money? Sure, IRS. Well, you can get a certificate of discharge, and the IRS will basically take its lien off of that asset because nobody's going to buy machinery or equipment that has a lien on it. And so you would have to get that certificate of discharge for that specific asset. So in the business world, subordination and especially discharge are very powerful tools that you have. Now, I want to say, I typically try to make every argument I can for future benefit to the IRS. When you request a subordination, for example, you can basically request one of two different bases for the subordination. The first one says, "Hey IRS, when you subordinate your interest, you're going to get a benefit immediately," such as the refinance example. Maybe you're getting cash out and you're going to pay off your tax debt. That may be a good situation for you. I don't know. Every situation is different. However, typically, I try to make my argument under the future benefit, which is 6325D2. That says, hey, in the future, you'll benefit. That gives you more leeway. The immediate benefit means that the only way they're going to agree to that subordination is if you pay up with whatever proceeds you're going to get from that refinancing activity or whatever financial activity you're doing that requires a subordination. So really important, try to get it under the future one. It's a little bit more flexible. Even if you are going to be able to pay off your tax debt, it just gives you more flexibility. And again, you do have to attach a statement. And I go back to what I said earlier. Be very careful what you say to the IRS. It matters what information you give them. Okay, so don't give them the farm. Don't tell them everything thinking it's going to help. It's not going to help. It will probably hurt you. So the statute of limitations, I'll show you here in the code, 6322, period of a lien. Okay, the lien lasts for as long as the statute of limitations is in existence. When the statute of limitations expires, that CSED date, the lien comes off. What does this mean practically? You've got to pull your transcripts. The transcripts are the IRS file. That is your complete record of account with the IRS, and that is so important. If you are working with a professional and they have not pulled transcripts or are not going to pull transcripts, walk away. You got to know what the transcript says. That's going to be able to tell you what your CSED is. I had a taxpayer, a client come in, it was a couple months ago now, and the expiration date was only a few months away, the statute of limitations. They had already paid us. I gave them their money back. I said, yeah, I'm not going to take your money for this because your tax set's going to naturally fall off. Okay, so my advice: get those transcripts. Look when that CSED is, because then the debt is going to fall off. Okay, so make sure you pull those transcripts. And that lien should fall off. Again, it may not automatically, so you may have to file a form to get it publicly noted that the lien has been withdrawn. So the statute of limitations is very important, because when the CSED comes up, the lien expires naturally. And finally, this is the Taxpayer Advocate Program. This is a very powerful tool. It goes underutilized by a lot of tax professionals for some reason, but a situation that doesn't really fit into a typical mold. Remember that Internal Revenue Manual, that's their guide, okay? The revenue officer, they're going to follow that. There may be a situation that there's really not a process to handle. Their revenue officer is not going to make something up. They're not going to invent a new process. They can't. But the taxpayer advocate can look at a situation and say, hey, this would be a fair outcome. And they have the authority to order the lien withdrawn. Okay, give you an example. Let's say you owe the IRS money and you're in collections and a lien's been filed. You hire a tax attorney, and then the tax attorney discovers, wait a minute, this is not right. You shouldn't even owe tax because the return was done incorrectly. Maybe it was 1099 income, and it showed the 1099 income as all taxable income, and there were no deductions. Maybe after the deductions, it eliminated the tax liability. Well, immediately your tax attorney is going to file that amended return, which is probably going to trigger an audit. The audit may last a year or more. Let's say in the meantime, the taxpayer is like, hey, I want to refinance. I got a lower interest rate offer and I want to refinance my mortgage, but they can't because of the lien. Logically, you could pursue a lien subordination, but that wouldn't be necessary because the tax debt really isn't valid because of the amended return. So this is a perfect example where the taxpayer advocate could get involved, say, hey, yeah, this makes a lot of sense. I'm going to order the lien withdrawn. Now, when the taxpayer orders that, that's exactly what happens. They're going to overrule the revenue officer. So the taxpayer advocate's a very powerful option that unfortunately gets overlooked by many tax professionals. So it's very fact and circumstance oriented. So very important that you talk to your tax professional. If you can't really figure out another way of accomplishing a goal, the taxpayer advocate is a good option. All right, so that is about it, and do want to tell you a few things we have going on. Again, thank you for tuning in. 7 ways to remove a tax lien. Very excited about this. We have a new program in the state of Ohio. It is Ohio Tax Attorney on Retainer. It's an exclusive group for small business. How would you like to be able to email a tax attorney and have a personal and quick response for no charge? Typically, we sell memberships to these for like $600 a year, but we're giving it away today. First people to register, the first 20 people to sign up, ohiotaxattorney.com/on retainer. So this is a great way to get involved. We provide weekly newsletter updates, questions about tax or business from a licensed Ohio tax attorney. So great information there. Again, that is ohiotaxattorney.com/on retainer. And then the next thing we want to talk about as well, we're going to open up for some questions here. If anyone has any questions, but I want to talk about we're giving away a free case analysis today. And the free case analysis is you call in, no charge, no obligation. A licensed tax attorney will take your information and tell you what your options are. Usually it takes like 30 minutes or so. You'll know right away what it sounds like your options would be, what you would probably qualify for, and what your case would look like going forward. Then the next phase, typically we do this for a lot more, but we're offering it for $299. It's the investigation of liability. So for $299, we would pull your transcripts. We would find out exactly what those expiration dates are, find out when the statute of limitations is going to expire on your tax debt. You would know what is tax, what is interest, and what is penalties. Because a lot of times we get those penalties removed. Okay, and so that you would get a full report of exactly what your roadmap to IRS freedom would look like. Okay, very important. And then with that, you would know exactly what it would cost to hire us as your attorneys. So with that, we're going to go ahead and open it up to some questions. If you have any questions, just use the chat feature. You can put those in there. It should be to the right of the panel. So does anyone have any questions? Yeah, so looks like Trent down in Youngstown. Okay, that's about an hour from where I grew up, actually. Trent in Youngstown. He's asking, good question, Trent. How much does it actually cost then to hire you as an attorney? Well, again, Trent, good question. So we're giving you that case analysis for free. Okay, that's that free case analysis. And then the investigation of liability is $299. And that's where you get your roadmap, exactly what needs to be done to get you current and compliant, what your tax resolution looks like, what those expiration dates are, what does the IRS say you owe in tax, interest, and penalties. And then with that, Trent, we would give you a quote for what it would cost for us to represent you. Our fees are flat rate, so to hire us as your tax attorney is going to range from $2,000 flat rate to maybe around $5,000. Again, every case is different. What I can tell you is that we work with a lot of different banks, a lot of different lenders. We have about 10 of them, and we actually offer financing for your legal fees. That way, we can get started on your tax resolution right away. There's no more waiting or anything like that. Okay, so very, very, very important that you handle your tax matters sooner than later, Okay, and one of the ways we can do that is by offering financing with some of our lenders. Again, we have about 10 lenders. The average payment, most of our clients end up on the finance with our lenders end up paying 90, 100, $110 a month, okay, for full service tax representation, full legal service. And so we do offer that. Our goal is to make it very affordable. Again, if you want the full pay, pay on credit card, debit card, however you want to, that's fine too. But again, the actual legal fee, Trent, is going to be somewhere between $2,000 to $5,000, depending on your circumstance. And then if you finance that with one of our lenders, and our lenders work with people with credit scores as low as 550, your monthly payment for legal fees could be $60, $70, $80, $90. If it's a bigger case, $120, $130, $140 a month. And you would actually get to pick which terms you wanted, how long you wanted that loan to be. So really good program. So let's see, any other questions? Desiree, Springfield, Ohio. How far back should you file tax returns if they're missing? Typically 6 years. Okay, that's probably the unofficial rule is 6 years. However, especially if you're dealing with 1099 income, it may make sense to go back and file even later because you can reduce that tax liability. And we do that. We're a full shop here. We do it all, one-stop shop for everything tax. And so we evaluate every case, and if it makes sense to go back, we certainly have no problem filing a 2003 tax return. And we've done that before. Okay, so typically 6, but we do go back farther if necessary. And Jared in Toledo was asking about penalty abatement. So yeah, if you come to us, we're going to look at that every single time, Jared. We're going to look at your penalties. That's why in the investigation of liability, we break down what those penalties are, because the penalties can be as much as the tax. It's not uncommon for the penalties to be the same as the tax liability. And so we have a very good track record of getting those penalties removed. We typically have to take it to appeals, but we are able to negotiate with the IRS and get those penalties removed or abated, as it's called, many times. A lot of times the penalties removed are going to be 3 times as much as your legal fee for us to represent you. So it's maybe your case is $3,000 for us to represent you, and we get $20,000 in penalties removed. I don't know about you, but I would pay $3,000 for $20,000 any day of the week. Okay, so we include that every time when we represent you. We don't nickel and dime you, add on different options here or there. When we quote you a flat rate, that is what it is for everything. So again, yeah, penalty abatement absolutely is included. And we do that for every client as necessary. So that is pretty much it. Oh, I forgot to mention. So that investigation of liability, so you have your free case analysis with us. And again, we're giving those away free today for people on the webinar. Call in 330-331-7611. Call in, talk to a tax attorney, get your free case analysis. Next step is at $299, investigation of liability. That's where we give you that report and your IRS transcripts for the roadmap to IRS freedom. And then the final phase is actually doing the resolution, getting it taken care of for you. If you hire us for that final phase to be your tax lawyers, we apply the $299 towards your legal fees. Okay? Again, we are trying to make this as affordable and accessible to as many Ohio residents, Ohio taxpayers as possible. So we are going to apply that $299 to your legal fees. Okay? So if you have any questions, we're out of time for today. Give us a call. There's no cost, no obligation. It's just picking up that phone and calling. 330-331-7611. Again, don't fight the IRS alone. Call today. Let's at least give you your options. Folks, thanks so much for joining the webinar. We had a pretty big group today that came in. I hope this was helpful. Again, as you operate your small businesses, your self-employment, as you get that 1099 income, you are on the radar of the IRS. Okay, so don't go up against the IRS alone. Call today. Let us help you. We are Ohio tax attorneys at JM Sells Law, and we've been representing Ohio citizens, Ohio taxpayers for many years. Give us a call. Thanks for joining, everybody. Have a good day.